All right, good morning traders and welcome to the AllMarkets webinar. This is Bruce at Bookmap. We'll be going through live order flow analysis using Bookmap to give us insights to where price might go. And the goal here is kind of a top-down approach here. Very, very simple. Why order flow? Well, we want to understand how traders are participating in the auction process. The only way they can is via their orders. Therefore, understanding order flow is really important. It will give you an edge around the levels and styles that you are trading. It can work with any style of trading. You're looking then down at the your specific level or way of trading to understand the orders within that that opportunity that you've back tested and trade. We'll go through many examples by understanding the order flow and how that can give you an edge. And that's what we're here for, building an edge, working out our edge. Otherwise, like, we shouldn't be trading. It's as simple as that. All right, so now the Blue Jacket, a few news items. We have the Blue Jacket competition is back for the month. It's on the trade control panel in Bookmap, so show us your best trade. You can even use replay mode. In fact, you don't even have to have Bookmap. You won't have to have a paid version of Bookmap. You can go to sign up and register on bookmap.com and download the free version. And look at delayed data and trade off of that, and just show us your best trade. Basically, that's what we're looking for. Mark it up, mark up your chart, post it on Instagram, X, or LinkedIn with free or hashtag free Blue Jacket and a description. You're in, just like that, and we'll judge them. You can use the QR code up here, take a screenshot, and enter into the competition. Now the process that we go through in here is the same that we go through for the Bookmap Academy and for the pilot program. I'll go into that in just a second. This is the top-down approach here, and this is building our playbook or our plan here for the morning. Impetus, what's moving the market? We want to understand what is moving the market. Today we had CPI data. Okay, that's important. We had the non-farm payrolls on Wednesday. That's important. We had core retail sales or retail sales on Tuesday, that was important. This has been a big week. We have all sorts of geopolitical stuff is going on there as well. And why are we going over the fundamentals in here? Because this is what moves the market. We want to understand not only what the data was in these economic releases and the geopolitical events that are going on, we want to understand how traders are reacting to it. That's really the key. What's the trader sentiment, the market sentiment? The employment numbers were great. The market dropped, or it chopped, but it dropped. And then yesterday it dropped a lot. Today we had CPI numbers, they were negative. That's actually probably going to be good. I haven't looked at the price action just yet. That's probably going to be pretty good though for the market because it means that okay, inflation is high. What are we going to do about that to ease the higher inflation in here? The two things the Fed looks at, if we look at inflation and we look at the employment. Now, like I said, the numbers were off here. They're lower than expected. They're negative. Okay, well, that means that the Fed will likely need to increase lower the interest rates in order to increase activity, stimulate the economy. All right. So anyway, that's the number one, impetus. Then our key levels on the higher time frame, where this is where we're going to get the most reaction. Most traders on lower time frames and higher time frames are going to be reacting at our key levels. We'll go through the process in here and I'll outline that process in Bookmap. Then we're going to develop strategies and scenarios around those key levels. What do we think is going to happen and why? So for example, if today, we see bullish activity and we're moving up to a key level and the market sentiment is bullish here, well, we'll probably look for a pause, a pullback, and a breakout strategy. All right, at our key level. So that's how you can drill down into number 3 here, scenarios and strategies. Finally, it comes down to our setup. That's when we choose the setup that mixes or supports 1, 2, and 3 here. We'll be looking for a breakout strategy, continuation patterns, stuff like that. Then we'll go through our setup, our checklist, grade it, determine the sizing, and execute. Look at the order flow to give us the edge here. All right, that's the plan. The Bruce's pilot program in here goes over all of what we just talked about, except it's hyper focused on building an edge. Okay, so repetitions. And this is a really why we came up with this program to begin with. It's free. It's included with Bookmap Global and Global Plus. So, we're not getting anything from it in that sense. This is for you, is to build an edge. And it was just so, disheartening to see that so many traders wouldn't have an edge in their trading. They understand the setups, great. But do you have an edge? And they don't know if they have an edge. They just don't. They're just clicking the button. And they don't know how to build a process for creating an edge. And that's what this program is for. Okay. So if you're interested, you can go to bookmap.com. I'll show you here. And then click on the More button up here. And then you go to Community. You'll see the Bookmap Academy here. You can sign up for that. And Bruce's pilot program is below it. Click on that. And you can read through this here. It's very simple. Sign up for it. And then we've got a whole process here on our Discord server that you can partake in. Okay. All right. Disclosures. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right. Let's jump in. Let's take a look. I'll close up my trading. This is a new 7.7 that I'll cover with you guys maybe in a separate event. It's a beta version right now, but we just created a video on it. Anyway, good morning, everybody over in Discord. Trading is Life, Dan, Stephen, Nadia, Lauren, and looks like Nan and Daniel Rue went over. Daniel, we went over your content from the Academy in yesterday's meeting, if you want to watch the recording there. And also Nan, you did some nice work there. So I know you were a part of the meeting. So anyway, all right, guys, well, let's take a look. What's going on here? Well, it looks pretty choppy in Bookmap. Actually, pretty nice stuff in here. Here's a really simple use of Bookmap immediately. We might be getting an opening range breakout trade right now. And this is what I think, was it Daniel or Nan was going over. Anyway, all of this kind of chop in here and we're starting to break out here. Okay, let's see if we get it. We have high liquidity up here though. We got to chew through all of that in here. Anyway, we'll come back and take a look at that in just a second. But look at this here. Okay, high liquidity in Bookmap on the bid down here, right? We can see the market in the overnight here guiding through high liquidity on the bid in these areas in here. Actually, a lot of transactions here at the London kind of mid-morning there. And then high liquidity over here, okay, at this kind of 68, 62 area. Okay, we're bouncing around between areas of high liquidity. All right, it's as simple as that. There's liquidity down here. We trade into it. These are buyers on the bid, and we see aggressive buyers come in, and they trade up to the sellers on the offer up here in the market structure. And then we sell off again. Okay, now there's more buyers in here in general. Okay, so that's why we're looking for this possible breakout trade, right? So anyway, I don't know what I think about a breakout in this environment right now. Going through our step process of what's moving the market and our key levels here. So let's take a big step back first, take a breath. Let's look at our candlestick charts on the higher time frame and look at our key levels here. We haven't even gone through the fundamentals actually. So what's driving the market out there? Well, there's still concerns about AI, being overbuilt and a pullback here in the tech-driven economy here. So yeah, it's still under pressure basically, and a geopolitical risk, all sorts of stuff happening. I mean, boy, in this environment, we have to be very aware of a tweet that might come out, or something that can be very disruptive to the markets. That's part of the risk in this, in this environment. That's what we're dealing with, and you have to be ready for that. Okay, so depending on how you want to manage your risk in here. Let's see what else. What kind of earnings do we have in here? Yeah, not too much, and yeah, just this CPI data, less than expected. And then now let's go back then and take a look at the kind of bigger picture with the FOMC. I'm sorry, non-farm, and these big moves here, big sell-offs. This one from yesterday here. Okay, the day before that here, this was the chop with a negative slant here to it, and the close with the red candle here. Kind of right in the middle though, right? Anyway, that was the non-farm. Okay, and then here's yesterday and the big move down, and here's today, the continuation of the move down, and then we're right back up, back into the range here from yesterday. So this range at the close down here. Is this the close? Oh, let's see. No. This is the close here that I'm talking about. So yeah, we are below that. It's this cluster in here at the close yesterday, which I kind of was anticipating this to drop a bit further technically. I don't know about you guys, but I thought this was a really kind of a strange, I mean, this is a big move, right, to the downside. No question about that. But do I really have a level down here? I mean, maybe something in here, but really I would look for either kind of a POC or the swings down here. And I was wondering if we'd get down there yesterday. We didn't. We closed here, as you guys can see. And then today, now we've tested it. Now we've tested down here, and we're getting a reaction back up at the moment. Okay, let's take a look at the 15-minute chart. Okay, well, we see a lot of wicks over here, right? And that means some selling pressure. And well, we've tested up here a bunch of times, 1, 2, 3, 4 wicks, and we found sellers. Okay, so now, and this one just made a lower high here. All right, so now I'm really curious then, based off the 15-minute chart here, for a move back down to this 68.30 or the low down here, which would be somewhere around 68.05 or so, something like that, or maybe 68.08. Okay, that's what I see. And let's mark up our levels on Bookmap and jump over here. Okay, so yeah, here's that retest back up here that we were just looking at as a potential opening range breakout, right? Well, we got our answer here. High liquidity, barely kind of broke. Did we even break the high? Yeah, we did. and it rejected, and we see the selling coming in. Okay, now we're still, we made a slightly higher high in here, and in the market structure. Let's go over the market structure. And this is a good starting point for today, and we'll take the volume dots off and the heat map off for just now, and we'll talk about market structure. Okay, because then we'll look at the order flow within the structure, and that'll really help clarify things for us. Okay, so here we can just draw a line across here as kind of a resistance line, and we'll see if it's supply, which when we turn on the heat map, we have a swing down here, and then we have a lot of chop in here, right? We can draw maybe a trend line like this, and we are, going upwards. We're making slightly higher highs and higher lows in here. Now this one's kind of interesting, this move lower, okay? And we just talked about it on the 15-minute chart. I'm looking for sellers in here, and I would look for the sellers to trade down to not this just level here at 68.38. I would look for them to trade down to this 68.30 level. Okay, these are minor intraday levels here, and there's another one here at 35 or so. Okay, these are less important levels than this one down here. Okay, and then this one way down here at 68.08 is much more important. All right, so this is the way that I like to draw up my levels. And when in the pilot program, when I mentioned to you guys how to draw up your levels and what is a key level for the setup, this is what I'm talking about. All right, and we want to understand now the order flow in these areas here between our levels, and then now we can turn on the volume dots. Let's just start with one. Okay, the volume dots. Okay, well, interesting, right? Like buyers pull back here, not so many sellers. Buyers again, nice cluster, not so many sellers, much more buyers. A pullback again, and then we get buyers and not as many here, but we do break out here and we come back up to the swing here. Okay, and then what kind of buyers do we get up here? Not much, not much. All right, so a lot more selling in here, right? So now, do the sellers have control of this from this point onwards, or maybe our 62 level? I really like this one in here. This is where they dropped it, it retested, and came back down again, right? So yeah, I'm kind of looking at the 68.58 to 68.62 area in here as a maybe we'll see if we get more buyers back up in here. Okay, right now though, based off of the 15-minute chart and the wicks that we saw up in here, the first scenario I'm developing is looking for sellers down here and then retesting some of these levels here. Okay, especially the 68.30 level. All right, so let's see if we get it here. Now we got the volume dots on, so we have a context within the market structure and the swings in here. Okay, now we have a context because we know the volume within that structure. Okay, and this is pretty choppy here, but I still see a bit of an edge here on the sell side, okay, from this move here. Okay, and yeah, we're just testing some of the structure down here. All right, we broke the diagonal, but maybe the diagonal is not as important in this case. Okay, so let's get rid of it. All right, so now let's go through another scenario for a potential scalp, and that would be down here, right where we are. I'm looking for not buyers. I don't want to see this. I'm looking for sellers. Okay, now this might be actually good that we're getting some buyers here, because they will be fuel to the fire if we get sellers below it here and we can get our stop run. Okay, one of the things that we look for in here is trapped traders. Where are they and what are their actions going to be? Okay, so we're starting to break now, and we came back down to a minor swing here. In fact, let me just tighten this up a little bit. Okay, I'm looking for that one to break too, this kind of 38 or 39 level. It hasn't yet. Anyway, there's our stop run here. That is likely some of these buyers in these areas in here. This is what we mean by trap traders and you know, moves down to levels or high liquidity. Okay, so now we put these two together here of like levels and structure, and then we've included the volume within that structure, okay, to give us that additional insight. All right, so let's turn the heat map on now. Now we want to understand who's taking the other side of the trade. Okay, so well, this is interesting. Okay, so we see some pretty high liquidity coming in at this area, at a few different areas, here at 42 and here at 40, and then also down here at 39. Okay, so these are buyers on the bid down in here, and the heat map is showing that. We can zoom in here and see what exactly those numbers were in the order book. Okay, yeah, here we go. 83 contracts, 67 contracts, 140 contracts, and 87 contracts here. Now these are larger players, okay, and this is actually from their point of view, this is bullish in here because they are bidding up. They're not waiting for price to come back down into these areas here. They're bidding up at a higher level in here. They want to get filled. They stayed in the book and they got filled. Okay, so this is where we're getting our value out of Bookmap, is understanding that, wow, okay, without the heat map on, we were thinking this is going to crater down, or you know, probably break these levels and come back down into these lower levels here. But when we turn the heat map on, we see something different. Okay, and that gives us insight. All right, so now we're seeing the potential for earlier we thought, well, maybe these guys or these guys up in here are going to be sellers driving price lower. Now it's the opposite. We're looking at these sellers and these sellers in here to get squeezed. And let's just draw up another level in here, a minor level again, okay, here. And we look for them to be buyers back up into 60 to 65 up here. Okay, so there's another scenario now, and that scenario developed after we turned the heat map on and started to see some of that liquidity getting filled in here. All right, so this was the reaction we got. Okay, now for those of you who are new in here, when I take the heat map off, you know, maybe you're looking at areas in here like this would be support, right? Okay, because you're just looking at price action and you're saying, oh, it's support. Okay, but how do you know if it's actually demand? You don't. Okay, but when you turn on the heat map, you do. Now you know it is demand, because here they are and they're getting filled. They're staying in the order book and they're getting filled. They're on the bid in here. And we see our reaction here. Okay, and now we're back up to this minor level we just drew in here at 57. Okay, I'm looking to see if we can get a short squeeze and break through and come up to maybe 65 now. Okay, that is the scenario I'm looking for here. Okay, we haven't talked too much about this in the pilot program, but talking about trap traders and moving away from areas and creating new structure. Okay, so let me take a step back and let me delete these areas here. Okay. Okay, that, this, and this. Okay, and we're going to draw some new things. All right, so structure, market structure, and how to determine market structure. It's really important. This is why we're covering this. And Thibaut, I see your question about turning on the heat map and volume dots analysis as the most impactful strategy you've learned since. Okay, great, excellent. I'm glad you find it helpful. Well, it's really what we want to understand is first structure, market structure, and then we're going to look for the kind of activity within the structure. That's really, really important. Okay, and we'll draw up our intraday, our levels, but also within range levels and our more important levels. Okay, so we're getting our breakout here. We're seeing it. Here's our stop run. This was what we are anticipating right here into 65. All right, so I would be taking partial profit there and trailing my stop up and looking for other areas that we might come up to now, maybe 80. Okay, now we'll look at 80 on the candlestick chart and put these pieces together. Right, but right now, we're seeing it trade up into our first target, which was 65. Okay. All right. Let's see. Oh, right. This is what I was going to cover. Okay, so now we covered market structure. Okay, and let's turn off the heat map again. Okay, by the swings, and putting in these lines in here and starting to understand our structure. Okay, and then in here these are the minor structures within the kind of price action from the open. And they are not as important. Okay, they can get blown through very easily. But if we zoom in again in here, and we were looking for a breakdown of that down to 30. That was our primary scenario in here because of this selling coming in. The move up here, our 15-minute candle, there was 4 wicks here. And then we're looking for, wow, okay, if there's 4 wicks, I'm looking for them to come back down to this 29.30 level here or maybe lower, right? And going with the bigger trend. Well, we see what happened now, okay? And we saw it in the heat map in here. Now, how can you take advantage of that? All right, so let's go through and start to mark this up in here. Okay, so what you can do is here's another structural area in here, back and forth in here. Okay, and we were talking about potentially it's these buyers in here that will be the squeeze to the downside to our level at 30. Then we rotated back up and we broke out of this range in here, and we're breaking out on volume. That's where we're looking for this to come up to some of these minor levels here, but we're looking for the heat map. Okay, and then we outlined that scenario of trading up to 65. Right, but we didn't know that until this failed in here, and we see the volume here. Okay, so we're breaking out of a smaller structure, and we're looking for it to test some of the other structural areas here intraday that are on a little higher time frame. Okay, but it's still intraday. Okay, you can start to put together strategies like this, and if the order flow supports it, you can start to put your targets in here as well. All right, Laura, is this making sense to you? You're going to be my, I'm going to bounce these ideas around with you. So just the same ideas here are here on the higher time frames. Okay, but if we just zoom in here and we kind of take out some of that higher time frame or previous activity in here, this is a breakout strategy here. It's a breakout, retest, and continuation, okay, for this small range. Okay, so how do you take advantage of that? You trade it to the other areas in here that would be considered higher time frame levels. Okay, the first one would be up here at 57. The next one would be up here at 62. But we're looking for liquidity to support our idea, and we're looking for potentially 65 up here. Okay, so again, be careful on these. It's within the range here. Okay, but on a smaller time frame, it's supporting the same ideas of a breakout trade here. Okay, so Nadia had some good content yesterday going over something like this. Okay, now I don't want to go through, it's not like a trend line break accumulation type of trade in here. But we'll go through some of the order flow elements to support the idea. All right, number one is, first off, we marked up our structure. Okay, and we had the heat map off. We're looking at volume dots within the structure. This big selling in here, that's where it looked like to me, with the heat map off, that we'd come back down into these lower levels. Okay, well, then we turned the heat map on and we saw this kind of activity. They're bidding up in these levels in here, 1, 2, 3, and 4. Okay, we see the selling into it and we see the rejection, and we come back out and we find some aggressive buyers. Okay, in fact, here's a micro. I hate to use that word micro, but it's here. I wouldn't necessarily draw that one, but this one in here, not bad, right? The same concepts, right? So this is what I was trying to articulate yesterday about understanding these ideas that we're presenting for the pilot program for this trendline break accumulation. Okay, now there's also a structure here, this little swing in here, and also the breakdown from here. This is a structure in here. Okay, we broke the diagonal, the trend line, we broke this structure, and we're starting to see the aggressors come in here. After, and in this case, we actually have 1, 2, 3 levels of high liquidity on the bid in here. Okay, so we do have the passive accumulation. We also, do we have a key level? Okay, on this time frame, we do have a level. It's not a key level, but on this time frame in here, it works. Do we break the structure? Yes. And do we get some of the aggressive accumulation? Yes. Okay. Now, the aggressive accumulation in here doesn't look so great. It's pretty paltry here. Okay? But we have a lot that got filled on the bid on the way down. Okay. So it doesn't take too much, and this is a context, and these are the things we've been going through to kind of explain these things and make a distinction between understanding the concepts within the setup versus following it so rigidly, looking precisely at the elements in the setup. Okay? It's understanding this kind of concepts behind it, and then you're starting to understand this kind of the market sentiment and context behind it, which is going to be a lot more powerful, and you'll be able to use it. You'll be able to shed the risk, because on a move like this, you're only looking for targeting the next area of high liquidity or the swing up here. Okay, and then you're getting out. And now it worked out a lot better than that on this one, but it broke another level up here. Okay. And it was still bullish. All right. So anyway, I hope this is making sense when we start to break down and zoom in to these other levels, and how we're still going through the same ideas of structure, market structure, volume, and liquidity. Okay. And putting that all into context. All right. So let's see, are we still going here? Probably. Let's take a look. All right, it's kind of slowing down up here at this 68.80, and a lot of liquidity here on the offer here. Okay, and we're starting to get filled in here. Okay, on the way up. All right. Anyway, yeah, Nadia did a really good job, and I think we covered it pretty well yesterday in the Academy meeting. Okay, and this is the same idea in here. Okay. Now the funny thing is too, we're adding another element in here about trap traders, and you know, we thought first the buyers trapped in here that were going to be the fuel to the downside, and it was the opposite. But once we turn on that heat map, we got more information, a lot more. Okay, and that's a great use of Bookmap. Okay, understanding liquidity, right? And then we're looking for where they might go, where they might target. Okay, we've got John in here. He was in the Academy meeting. I know exactly what he's looking for. He's targeting areas of high liquidity. Okay, and looking for these moves up into these areas here. And now we just traded into an area of high liquidity. Let's zoom out a little bit. This liquidity has been in here for a while, okay, since just about 4 a.m. East Coast time. All right, and then they did pull some in here, but they added back in, and we just traded into it. Okay, so this, let's see, does this match up with a higher time frame level? Not really, right? Our higher time frame level is over here, okay, just around 98 or 6,900. Okay, that's our swing in the price action. Okay, you can just see how powerful liquidity is. I mean, it just makes complete sense. It's just where buyers and sellers are. Okay, it's supply and demand, and we trade up into it, and we have no more demand up here. We see the sellers trade it right back down. All right. Anyway, no, I don't have a strategy for this up here, but doesn't really fit anything I'm looking for. We do break the structure in here, and we're breaking it on some size in here. Okay, we can come down to this next level. We can come down to this next level. They've already traded, and then we can come down to our level here at 57, where we were. We have a swing in here as well. Okay. Now, I mean, these are minor levels in here. Maybe down here, this little swing right here, 54 or so, okay, or even down here at 50, 49. Okay, where do we see liquidity? Liquidity's coming in here at 58. All right, let's see the sellers hit into it. Okay. Okay, I'd like for that to happen. Here's what I'm looking for: rejection up here, back in here, selling below 62 basically, and then a move down into 58. Okay, see how they're still buying off of that though. All right, a little more selling, but they're getting squeezed immediately. Just immediately. All right, so this guy actually pulled that liquidity now and added it here at 60 and a quarter, what it looks like to me, and then down here at 55. Okay, so see how our target kind of shifted here, right? So now I'm looking for 55. I'm sorry, 60, and then 55 if we can continue on here. So we moved from 58 to 60. And let's see if we can get down to now maybe this 55 area. Okay, why 55? Well, we don't have too much there except for like a high volume node here, right? So there's probably a lot of volume profile traders coming in. This is really interesting, guys. Like I'm always just fascinated about this. You can see specific traders and their liquidity in here as well. Like, you know, people are thinking, well, I'm just going to be buyer right in front of that high volume node there. Let's turn on the POC. Okay, there it is. So there it is right there at 54 basically, and they're in front at 55. So is it really a key level? No, not really. I mean, you know, we thought this kind of 57 was a little bit better. There is a swing here at 54, but I kind of like this one down here at 50 and a half better. Okay, but you can see these volume profile traders starting to line up here. Okay, so now I want to go through, take it one more step a little bit further in here. Think about these volume profile traders in here. Okay, this is a deal for them. Okay, what if we continue on through that area? Well, then it's, yeah, those guys are going to fail. They're going to be sellers in here down to maybe our 40 level down here. Okay, so again, we're talking about some of these scenarios and identifying the pain that these traders are going to be in if we get sellers through it. And that's the scenario starting to unfold. Okay, and then you can also see, I mean, I just love this stuff. There's some liquidity here at 50. Now that's a little different, you know, that's the half figure, and then there's some here at 48, which also coincides with a developing POC. Okay, so that's where this liquidity is coming in. All right, so maybe we can, you know, are they going to be able to absorb now all that selling pressure? If we can still see sellers driving it below 48 here, look out. Like those guys are going to have to flip, and we'll see the move into 40 and maybe lower, okay, down to our 30 level. And just going through scenarios in here, and then we'll look at the order flow. Okay, or you know, maybe it bounces in here. Maybe it's enough buying, they absorb that selling pressure, lack of sellers, get buyers in here, and we come back up now to 70. Or continue to break out maybe to 85. I'm still seeing sellers. Structure is still negative. Okay, so I would still look for them to press this bottom edge. There they go. Okay, and then now I'm looking for a nice clean sweep down into 40, liquidity down here, due to the scenarios we just outlined. Okay, these volume profile guys buying the POC are going to be the sellers driving it down lower here. Okay, so anyway, guys, that might be a little more advanced, but you're starting to understand the behavior of traders. What would they do? And you know, what their order flow might look like in here. Okay, because we saw them coming in here. Okay. Let's verify. This is one of the nicest things I like about the stop run indicator, is to verify that idea. Okay, confirm it. Did we get a stop run? Yeah, we did. We did, right? So let's see if we get a bigger one. Okay, back down into 40 or maybe down to 30. Okay, but nice target, nice liquidity down here at this 40 and 37. And this stuff here, I mean, this is one of the biggest movers for um, these smaller time frame moves. Okay, it's one of the biggest um, influences. Okay, it's trap traders. Okay, that's my opinion, but you know, go through some of the ideas, and I like to confirm it with some of the order flow in here, knowing that these are stops triggered down into these areas here. And let's see it here. Let's get down to the bottom of the range here. Remember how funny this is? Just so funny too. Like, this was the move we were looking for over here, and then we got a move up into all of that liquidity up instead. We got the opposite. Okay. All right, so now there's even more and more liquidity coming in here at 40 and 37. So that would be my target. I wouldn't really be looking for this 30 necessarily here. Okay, it's really starting to grow here, right? And on 2 levels as well. Guys, any questions? It's been pretty quiet over here. Another thing I want to show you guys, I'm gonna insert a new column in here, and we're gonna make it a notes column, custom notes column. Okay, and I want to show this to you. Okay, and it's going to be kind of an easy way to show options activities at certain levels. Right, and let me show you I'm doing a search in here. CME Vol2Vol is what it's called. Okay, and we'll hit enter. Here it is here, expected ranges. And then let me show you this tool. Now, you will need to register at the CME website in order to gain access to this. Okay? And it's pretty cool. There's no cost to it whatsoever, right? And it covers all markets in here from the CME. You got to come down here and you select your product, click on this, okay, and then select first off the asset class, the product family, and then the product, right? So equity indexes, okay. Then we can just jump over here to S&P E-mini, okay, and here we go. All right. So now what this is showing, these are puts, okay, in yellow, and in blue these are calls. Okay, these are spikes in here, and now this is intraday. Okay, they update this intraday. Okay, we can also go to end of day from yesterday. Okay, we've got open interest, churn, open interest change as well. Okay, but let's just take a look at, well, let's start with end of day and 6905, 7,000. These are a lot of calls in here. Okay, now this is from the CME. It's not like the SPY and other instruments. It's just that we're just talking about the, you can see for this symbol here, the EW, right? And we're down into, yeah, well, we see 7,000. We see calls and puts at 69.50. And then we see calls and puts here at 6,900, but mostly we see puts. Okay. So now what we can just do is come over here and go to our 69 level here. Okay. And we can just right click in here and add a note. And then all I'm going to do is put in the style here. I'm going to just mimic their kind of yellow color here, and that's it. Right, that's a little too yellow. Go with this mustard color, and there we go. Okay, we can put an alert on it as well. Let me do that actually. Edit. Here we can go down to 6900, and then we can enable alert in here, a sound alert as well, or an alert that will show up in the lower right hand corner. It'll also put a line across here, a 1 pixel line that goes across. That's why I'm putting it in here. And then let's go back to the color. Okay. All right. Okay. And you can see that little line right there, right? It's kind of hard to see with the liquidity that's there. All right. Okay, so let's see, 6850, 6800. They're all in the figures, as you guys can see. And this is something I've been looking at. I'm just testing it. You know, I don't know what I think about it yet, and how they coincide with things, but it's another confluence basically. A 6850 or 6850 here as well. This was calls and puts, but mostly puts. Okay, so we'll turn that on as well. I don't want the sound notification. And then the style, we're going to put in that mustard color again. All right, so we have some things in here to take a look at. Have any of you guys played around with this at all? Again, there's a guide in here, you know, user guide, etc. You can go check it out, and you know, read through it in here. You got standard deviations in here as well. This is one standard deviation here. In the gray area, here's two, with the little bit lighter gray area here. All right. First time joining over in YouTube. Okay. Welcome. Will there be a Chinese version added? Not that I know of. Wave peruser. All right. Okay. All right. So maybe this helped us a bit. I don't know. I'm not really sure. I mean, like, am I just speculating in here on that one at 6850? Because like, how do I make sense of it over here? Like maybe it's a squeeze. Like we talked about it being a squeeze, which it was. You can see the stop runs here, but we're above the puts, right? And let's see if we can get down below the puts here at 6850 though. All right. Anyway, let me take the POC off here, and we're going to take off the. I'll just keep I'll keep the options levels in here, but it's just a very thin line in here, and we're just kind of testing this, taking a look at it, and we're just going off of the levels we've drawn up in here, our major and minor levels that we want to understand the price action and order flow around those levels in the market structure. That's it. That's our goal here. No one else using that Vol2Vol tool? They've had it for years, actually. I don't know if they made it into a chart like that until recently, but yeah, I do remember it from before, years ago. I think before Spot Gamma came out with some of their stuff. Okay, here's a kind of intraday level or minor level, but we did get a reaction off of it. Okay, so this one here. I think we can get rid of this one now. Broken that many times. Get rid of this one. We've broken that. Let's see if we can get some sellers down below 57 into 55-ish right here. Looks pretty good. They're starting to come in. I just don't see a whole lot. Okay, so there's some liquidity starting to come in here, 56, 55. All right, sellers, let's see if you're going to go for it. No. Oh, they're bidding up here. Okay, stronger bid. And we're getting buyers. Okay, all right. Then let's see if we can get the squeeze here to the upside. With this bid coming in like this, I like it. I like the scenario. Trading here on up to 67 and 70. Okay, we're probably going to get a pullback to about 61 here right now, off of the minor level here. Okay, but let's take a look here. Okay, and pull back to well, now we've got a very minor level in here or here, right? So we're kind of looking at this little area here around 62 to 61 as a pullback. Right, there we go. Now let's see it. No. Okay, come back down a little further. Okay, let's see if we can get our buyers here. All right, now this is what we're looking for here at 64. A lot of buying. Okay, and then we can get the move up into, and they can sweep the order book up into 67 and 70 here. Okay, there's our 67. Still looking for more. Okay, stop run, beautiful. Guys, we've been talking about these stop runs on these choppy days. Like this is the behavior that drives these kind of small moves like this. There's our stop run, right? And we are anticipating that. Now we got some more selling coming back in. They might, if we can get back up above here. Again, we got to get our buyers up here at 67. Then they'll be the fuel for the move up into 70. And these are just small moves in here. Now the stop runs though can kick off much bigger moves. No question about that. Okay, but these stop runs in here, like, you know, people just getting ground out of the market, grinding out and chewed up in here. And then the market kind of goes sideways for a bit. You know, so around these levels in here, we see these the trap traders reacting to these areas in here. Okay, I won't be able to show it in Bitcoin because the liquidations does not work in the add-on in this new beta version 7.7 yet. Okay, but understanding that that concept is really illustrates it well, as do the stop run indicators with Bookmap here. Okay, so we would look for spikes at these areas in here. Okay, above these above some of these swings. Okay, here or below some of these swings. Right, so it's very choppy, right? But people are positioned, getting annihilated. Then it comes back in, goes the other side of the range, stops them out, comes back in, and it just repeats again and again. Really, guys, no interaction in here. Come on, there's got to be something in here that sparked an idea, or maybe irritated you, or one thing or another, or maybe the way that you trade. Let's see, Starship Trade over in YouTube does Bookmap. Any reason Bookmap does not install as a standalone like Thinkorswim? We are in Thinkorswim. This is a standalone without asking for admin permissions. Yeah, I mean, I don't know. Like we need to. It's not it's not free. We need to keep people honest in here. So I don't really know how to answer your question. If you have API questions, though, I can point you to that. You can very easily just go over to bookmap.com. Guys, here's our move up into 70. I think we'll probably skid through it, to be honest. Maybe up a little higher, here around 75-ish. Let's see. Okay, because I just don't see a stop run up here. We had a small one here. Yeah, I'm looking for it to really just kind of skip through that, though, with a quick move. Anyway, go to bookmap.com and I'll show you. We'll keep an eye out on that move. Okay. Click on the More button. Go to the knowledge base. Okay. In the knowledge base in here, we have 3 different sections. We've got the user guide section, which will answer just about any question you have about Bookmap. We have the add-ons section here that will go through all the different add-ons. They're over here on the right-hand or left-hand side, and then our API in here. Okay, so you can read through this in the API. I hope that helps. Hopes that answers any of the questions you have. Your head is spinning off already by looking at these bubbles. Okay, well, it's just in a good way or a bad way. I mean, what the bubbles are showing you, like this move in here, is momentum, no question about it. Right? And where are we likely to go? 78, 80, previous swing up here. Maybe up to 85. That would be breaking high of the day. And in momentum moves, we can go over that low volume pullback just very briefly here. But in a momentum move, when you're looking for a low volume pullback, you know that the buyers are moving price. They're in control. And then what you're looking for is now in this kind of move to the upside here, very strong and very exponential in its curve here, or its angle here, very steep angle. So what are we doing? We're looking for very minor pullbacks. Okay, and now we just got a deeper one here, right, which may lead to some chop, but anyway, we're still back up here, and we're still finding buyers in here. Okay, so the likely move in here is a continuation on up to 80. Now let's see what the bid looks like underneath here. Does it support it? And then we're looking for another string of volume dots here to the upside. Okay, now that's really interesting. See that very, very quick move here by the sellers. Okay, look where it traded into though, here. Now this is an algo here chasing. And now we can go. Now we can go. All right, so now we're looking for the move. There's the bid support. Now we're looking for 78 and 80. Even more support here. Okay, they just came in. Now sellers took them on. Okay, so what happens after that? Let's take a look here. Do we get buyers back up above? No, not yet. Yeah, I was pretty sure it looked like it to me. We were going to continue on up after this move here. And then this bid in here being strong looked to me like, yeah, we'll get the move up to 78 and 80. Okay, we're doing another rotation in here, and the sellers took these guys on that bid. Now they transacted. Okay, so these are buyers here, and the transaction took place. Here's high liquidity, one player, large lot tracker showing that here at this 75.50. Okay, this is kind of nasty stuff. They're actually, it looks to me like what we're getting in here. See this order book sweep and stop run? A larger player in here has had enough. They are showing very high liquidity here, and then they're also hitting market sell orders once, twice. Here's the other move, and then they're kind of just saying like, look, we're moving the market. Okay, and this is our impulse move in here. We're going to lower prices. Okay, now we didn't know that was going to unfold in here. Okay, but that's the order flow phenomenon that we're seeing in here. Okay, that was pretty nasty stuff here. Yeah, there's three of them, 1, 2, and 3. Okay, they're just hitting market sell. Moving the market, triggering stops along the way, and showing high liquidity on the offer here, and is highly effective here. So nice work by the some of those larger players. All right, so where does that leave us here at an inflection point? All right, here we go. All right, thanks. Repeat back in. Pretty tired. You just ate, so chilling, listening, Steven. Okay. Looking, just kind of observing the NQ repeat. Yeah, it's Friday as well. 1 foot out of the office. Let's see. Cathal Power said we don't have a stop run up here. How do you know, or what identifier that we don't have for a stop run above 70. Well, I'm just looking at this red line in here. It's the cumulative volume delta of the stops, okay, the stop orders. Okay, so it just you know, if it's a buy stop, it goes to the upside with a positive number. If it's a sell stop, it's negative, and just adds them all together. Okay, so but again, like, not only we're anticipating and confirming some of these stop runs in these areas by looking at where potential trap traders are. Okay, and looking for them to be part of that order flow move. Andre, yes, and thank you. Have been like meme coins. Well, let's take a step back. Let's look at our bigger picture in here. Yeah, I mean, look at the daily over here. Let's zoom out a little bit here, because it's crazy. I mean, like, this is a massive choppy area in here on the daily, and with big moves as well. So swings up, swings down, swings up, etc. So yeah, it is kind of behaving like that. But again, we're just going through the same process. Yeah, Laura, I was going to actually mention to you. I think it might be better for you to you've been working on with the NQ for quite a while, but I think you might want to jump over to the ES and just stick with that, or maybe the Russell, but it's just the NQ is just way too volatile. It's like, what is it, 27,000 or whatever it is. The moves can be really big, and you can really get hurt with those moves too. Also, the margin requirements are going to be higher, I think the ES will be a little more forgiving as well. Okay. Yeah. Oh yeah, I wanted to look at the VIX today. And what is the VIX at right now? Let's just jump over. Okay, so yeah, the VIX climbed up yesterday today to just above 22 here. And so we're really kind of interested around, well, really around 30, but like above 20. You can just kind of draw a line across here. You can kind of see when, these are elevated areas in here, and then you can see they come right back in. Talk about mean reversion. Volatile, back in, volatile, back in, volatile, back in. Even these bigger moves in here, like I forget what this was back in October, but probably tariffs, and then tariffs again, I think, but back in. You options traders in there are just loving that kind of stuff, for sure. Also, dip buyers. These back up into these areas in here. This is where we're finding that people buy the dips. Okay. All right, above a minor swing in here with liquidity. All right, so let's see if we can get now. Not just to this move here down to this little range in here, which we're seeing a reaction there. I'm looking for a bigger move here. Let's see if we can get back down to maybe 64 or 62. Guys, this impulse move over here that we saw, and you can see there's like 3 little ones in here from that larger player activity. Like I said, keep an eye out on this kind of stuff. It's pretty nasty. Now here comes the response right back now, and that's going to be a big stop run too. Okay, all right. So now let's see if we can get a battle going on here between where these guys came in, which is in this area in here. Okay, and you can even see those moves in here. They turned into kind of a level, but now we're back up above that area, and we're testing these guys. Okay, all of this selling in here. Okay, are they going to defend it, or are we going to see them kind of flip out? Okay, I would look for these buyers to retest it, and retest these guys up here, and let's see if we get a defense. Okay, now nothing supports that scenario in the moment except for this really, really quick move here. And so it's just speculation on that. So no, that's not a strong scenario. Just because, no, we want to back it up with order flow. Usually NQ more following what ES does. No, I usually find it the opposite. Tech has been driving the market, in my opinion, on Andre. So the ES, well, I mean, they've got a lot of tech in the S&P 500 as well, but the Nasdaq really starts moving, and tech, or the ES, kind of follows along. And the ES does a lot more kind of a move and then comes back in, a move and then it comes back in. Okay, all right, let's see if these buyers are going to let's go over another concept we've been talking about. Here's some aggressive accumulation in here, right? Okay, now I don't want to see that selling. That selling is not good. But if we can see like aggressive accumulation back up here again, okay, then maybe we got something. Yeah, you can see it's not working out at all. We need to see them, and yeah, in fact, we got even kind of a level here. What we need to see is the aggressive accumulation actually above that area in here. Be fantastic to see, and we're not getting that at all. Okay, let's see. Did we see some of that activity from larger players defending that area we just talked about? Not really. I don't see them just hitting the bid hard. Okay, so your seller is going to go for that 55 liquidity again. We were looking at that earlier. Over here, I believe. Yeah, it was over here. That was it when we were covering that POC move. Yeah. Laura, NQ's 2 falls of trade, so you're having pancakes. All right. That's I love the kind of linear process there. NQ too volatile, pancakes. All right. Let's see. Brian, shake the tree. profit takers algos prior to NY lunch, the New York lunch. Maybe. I mean, it's 11:30 here. We got the European close, and it's Friday. Yeah, let's actually, we've been covering so many nuances in here, and the reason we do that is to go over many different things. Okay, it's not to confuse, is to understand. Like if we didn't zoom in and we show this in here, like this larger player behavior in here, showing massive, like a spoof in here, and then the reaction being hit the sell button, hit the sell button, hit the sell button to drive price away from an area in here. And it was highly effective. It disrupted everything in here. Anyway, we want to go over that concept and just, you can see some of that in the order flow in here. And then I thought for sure, like these are the buyers coming back in, put these guys, put the pressure on these guys here, and maybe we can get them to flip out, right? But you can see that the sellers are winning the battle here. Okay, and it all started really here. Unless we go back and maybe look at that same behavior over here earlier. Okay, so and they're driving that market. Okay, we just hit that 55 liquidity. So anyway, that was a concept we went over, or something we saw in the order flow, and then we want to cover that. Okay, and then we went over another one in here about trap traders. Several times we talked about trap traders in here. Well, I'll probably entitle the webinar about trap traders. Yeah, there's some good stuff in here. Even this move in here, and the move back up above it, the trap in here. I thought we might have said, I think we were looking for 40 to trade, and it didn't. All right, guys. Well, anyway, let's wrap it up. We'll call it a week, and yeah, I'll put the recording into the chat room here in just a few minutes. But thanks everybody. Good week. We had some pretty good webinars. We had a nice Academy meeting yesterday, and pilot program guys, keep a lookout. I know I keep saying it, but I'll have that document pretty soon, that guide for you guys, a morning plan, a time of day plan with strategies, this kind of top-down approach that I've been going over here in this slide here, but in a much more step-by-step process that I think will be really helpful for you guys. All right, and it'll be a lot more than just this. I'll also put together something for the higher time frame levels that we've been covering. I know that these have been questions for you for quite a while, and we're answering them in the webinar in here, but I'll have it in a guide and some videos for you so that you can put this together. Okay, and then that defines what a key level is, and then what we're looking for at some of those key levels, right? Anyway, that is the goal, and we'll have also the low volume pullback set up soon after the guides that I'm putting together. It's going to be the guides first. All right. Oh yeah, thanks Alois for the reminder. We are off on Monday, that's right. So I won't see you guys on Monday. It is President's Day here in the US. It's a national holiday. The markets are closed. Okay, so we will catch up. That's great for me. That means that I can put more of this effort into some of the guides and low volume pullback for you guys. And we'll have some of those materials a little quicker. All right. Yep. Thanks for coming, everybody. Have a great weekend, extended weekend, and we'll catch up with you on Tuesday. All right. Yep. Thanks for coming, everyone. Yep. Take care. Bye-bye.